Hey Rob, you are currently live, so if you want to go ahead and start the intro. You're live on YouTube, you're not live in the webinar yet, so you still have to start the webinar. Hey Rob, you still have to start it whenever you're ready.
Hi everyone, this is Rob Roy of Elliott Wave Options, and welcome to this week's TradeFinder Live. Get you the correct screen here. If this is your first time joining us for TradeFinder, welcome. And if you've been here before, you know the opening drill. We have to go through this disclosure/disclaimer. It is important. Don't want to make light of it. So if this is by chance the first time you've seen it, please take a screenshot of it, read it in detail in your leisure. And then a couple of things the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And two, we have a lot of international viewers, a lot of international subscribers. So any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. Other than that, again, please take a screenshot of it if you don't already have it. Read it in detail at another time. The way the TradeFinder works, if this is your first week with us, we'll take a look at the market. Pretty interesting the way the market is trading right now. Volume, I think, is important to look at this point in time. So we'll take a quick look at the market. We'll review any closed positions that we may have done for our Elliott Wave option alert subscribers, give you an idea of how that process works. That's really important right now because right in the beginning, just want to remind if you've gotten an email from us or some sort of a notification, want to remind you that tomorrow is the last day to sign up for the special offer of our volatility portfolio where you get our Strangle Mastery class included for free. That's one of our premium subscriptions. That's usually an additional cost even for subscribers, and that is free. And then next week, next Wednesday, we will be doing a live Q&A on the Strangle Mastery. So it's perfect timing here. I think this is ideal. The way it worked out, you never know how things are going to work out when you release educational material, but especially right now with where the market is, we continue to move up on lower and lower volume, and we're reaching more and more resistance levels from a Fibonacci standpoint. the market's going to make a substantial move. Now it could break higher. If it breaks higher, there's a lot of stops that are going to be taken out, which I think will give it a boost to the upside, or this may be the point where we run out of gas and we have some sort of a meaningful correction. Point is, something's going to happen, but we don't know which way. What better strategy to use than a strangle at that point in time, which is the gist of the volatility portfolio, which you'll get in addition to the educational material explaining how it works. So it's perfect timing for you. So again, please don't miss out on this rare opportunity. It does end tomorrow. That's not just BS. It will be over with tomorrow. Then we'll go through and take a look at our weekly case study considerations that we identify during TradeFinder. We'll look to see if we can find one tonight as well. And then with whatever time's left at the end, we'll do a general Q&A, which usually amounts to you guys asking us about your favorite stock symbol, and we put it on our indicators to see what it might show. One more piece of housekeeping, if we will, before we get into looking at the charts. For our alert subscribers, the insiders meeting this week will be tomorrow night instead of Thursday. I have a conflict Thursday night, so we're moving the insiders meeting to tomorrow night, same normal time, 9 p.m. Eastern time. So again, the insiders meeting is tomorrow night at 9 p.m. All right, so with that, let's take a look at where we are with the market. And we continue to creep up here as we just have passed barely that 426 level. We closed at 427 today, so I don't know if that counts as putting much distance behind it. If you take a look at the DMI, it gives you enough to be interested in. If you're long and you feel like the market should go higher from here, we do have separation between the two directional indicators. The ADX is a long way to go to get to my more aggressive level of 20. If you read about the DMI in some sort of educational material elsewhere, you'll see that you want to look at for the ADX to break above 25. I think my experience has been that's a bit too conservative. And if you wait for the ADX to break above 25, you've already missed a good part of the move. So I like 20, especially when you combine it with our other confirming indicators that we utilize. DMI is not the only one that we use in our technical trading system. It's a primary one, really like it, but we don't just rely on that alone to support Elliott Wave. So just wanted to mention that if we do break above this area, and I've mentioned again that I think that if we do break above here, then it'll be a pretty volatile move with some volume coming in. That could coincide at that point in time with the ADX breaking above 20 and showing that we've got room to run up to that 261.8% fib extension level that you've seen us talk about. Well, let's take a look at volume. And there's where the concern is, right? So you take a look at this, and here's the move to the upside here, and it's all on declining volume. So you take a look at that and say, that does not look like what you want to see for a market to break above substantial resistance. And yes, there's substantial resistance right here. You've seen the videos. Hopefully you have. If not, go to YouTube, look at our channel, Elliott Wave Options, and you can see how there's 3 different zigzags that coincide all within 6 points of where we are right now. So very important to put a lot of weight in that resistance, in my opinion. And so that's why I feel like if the market can break above that, and we're not the only ones that know where those fib levels are. There's a lot of program traders, and they program their stops based on where these Fibonacci levels are, support, resistance, etc. So if the market can break above these, there's then a lot of short positions that'll have to cover, and you'll get a volume spike, and that's where we could get a significant move higher. Has to happen first, though. And today's move, that's not going to do it. That's not going to scare any of the shorts whatsoever. A little tiny bar there with declining volume. Yeah, they're not worried at this point. I can tell you that. We look at the 10-day moving average, which is that lime green line there. Really not a whole lot of separation there. We're not necessarily overbought. The move has been just a touch more vertical than I would like. I think if you put the arrow there, that's a pretty fair representation of the angle of ascent of the recent move. I'm more in favor of this, the 45-degree angle. And so you could say, well, yeah, we're back up into that area. Fair point, but we've gone kind of vertical to get there. And will that spell the fact that the market needs at least to rest a little bit before we take a shot at breaking to the upside. And I think so. So I still think caution is the most appropriate thing to have in your trading. We still have long positions. We are by no means just all in on the short side. You trade what the charts show you. And as long as the potential is there for the market to go higher, you balance out your portfolio, you have long and short positions, and you wait for a definitive move, and we will get one. Every day that goes by is a day closer to that happening. We have a lot of strangles. We had another one today, and another one since our last last TradeFinders meeting, one that we identified here. We sent out as an alert to our subscribers. So we'll go through that in a few minutes when we cover our recent case study considerations from previous TradeFinder meetings. So that's where we are with the market itself. Again, if you're long the market, you want the market to go higher, then this gives you a little bit of positive hope here with the ADX curling up. Still got to give above 20. The separation is good, so potential is there for a big move higher, but it isn't going to happen on this kind of volume. So, I mean, you have just a really low volume day today. That's not going to cut it. As I said, something significant needs to happen from a volume standpoint. So we get a lot of questions on these different markets. So rather than wait until the end and just cover those in the beginning, because there's not much else to say about the SPY right now that we haven't talked about numerous times in the past. Here's that zigzag pattern that we talked about in a TradeFinders meeting that showed this extension down to the 161.8% level. And I commented in the last SPY market update that we had this support level here that needs to hold. 161.8% extension level is there. There's also another layer that the Bitcoin is trying to hold, it appears. You can see the numerous touches there, especially over the last week or so, right there at 32,000. And so we're back up. You can see it was a pretty decent day today. It's trying to hold, but right now, if we're being completely honest, I know this isn't what everybody wants to hear. They want to know where it's going. We're in no man's land. That's just where we are. And we have been since May. Once we came down and hit that 161.8% level, we formed that one triangle. Now we formed this descending triangle, and today's move doesn't even move it up to the point where it breaks this level. It's a little bit higher right now, but we'll see if it can break that level. I don't even think breaking out of that upper trend line of the triangle is that important at this point in time. The two levels are right here. If we break below 161.8, 161.8% extension, as we've noted in the past, Bitcoin likely comes down and fills that gap. And then I know it trades 24 hours and, there's just this, it's like the futures where it doesn't really stop trading. I understand that, but still it's there. And then we have this other potential point of support here. So if Bitcoin can't hold the 161.8% level, then we're likely coming down to 24,000. And if that doesn't hold, then 20,000. And then you don't even want to talk about the 261.8% extension. Long way to go to get there. Would have a lot of people come in and support it, but they're supporting it now. So as it comes in, you can read in the financial media, et cetera, they're saying the big boys aren't supporting it. Somebody is. Somebody's coming in and supporting it every time it comes down to this level. Again, we aren't the only ones that read charts. There's a lot of people that are good technical traders that look at charts and understand them. And so we're not the only ones watching this. My point here is what you need to look for, and you just kind of relax. In the meantime, is a break above here. So basically 42,000 would be a go sign with follow through to the upside. So if it broke above this 100% downward extension level here, if it broke above that, so that would be the highs there from mid-June with follow through, then we could be off and running. And then the other side is if it breaks below the 30,000 level here with follow through, then you're looking at 24 and maybe 20. That's it. That's it. The chart is pretty clear in my opinion. And I think the formation of the descending triangle is going to show that when it makes its move, it's going to be in a hurry. So it isn't going to be just, slowly breaking above 40,000 or slowly breaking below 30,000, it's going to be a significant move when it occurs. There's no way to know which direction, but those are your two levels to watch. And then we've had people ask about looking at the Qs and IWM, so we'll cover those markets as well, and then we'll move on. So there's the Qs, which are in no way in lockstep with what's going on with the SPY. So that's fascinating in its own right. To me, that's a bit too vertical. If you've heard me talk before, you know I don't like this. And the reason that I don't like, of course, if you're long the Qs, you're loving it. You say, well, why don't you like it? Well, the more vertical the move goes, the more severe the corrections tend to be. So I just like the 45-degree angle move better because those tend to be just normal pullbacks, not really corrective moves. And so you can see that we've moved a bit vertical from that, which means to me that when there's a correction, it'll be a stronger correction, something along the lines of what you see right in here. But there's no doubt that the Qs are looking much better than the SPY is. A little bit better on volume, still below average, but that's a better looking volume bar than we had on the SPY. And we're in a wave 3. When we look at the DMI, that looks great. So it's ahead of where the SPY is. So if you look at this, that's a go signal right there. I wish it wasn't so vertical. I wish it was less vertical than that, even just a little bit less than that. But you have to respect the fact that that's about as good of a DMI as you're ever going to see. If you're looking for when do you want to enter a trending move, that's it. That's the DMI that you want to have confirming the move. Good separation between the two directional indicators, the positives going up, the negatives going down, the ADX is curling up, it's broken above 20. That's pedal to the metal, go. So can the SPY correct when the Qs are looking as strong as they are? Maybe not. Maybe we got to go a little bit higher on the SPY first. It certainly looks like the next stop for the Qs is 370, hit that wave 5 target. Based on that DMI, it looks really, really strong. You would like a touch more volume, but as I said, it's better volume than what's on the SPY currently. And so if we look at the CCI, it's up there, but it's not like extraordinarily high. So there's some room. Remember, when you look at the CCI, past history is very important. Part of our education is an educational series called TradeScan, which basically highlights all of the indicators that we look at in our technical trading system. So there's an entire session on the DMI, the CCI, CMF, checking money flow, et cetera. So when I talk about these, you have a better understanding of what we're talking about. So I don't have to explain how the indicator works every time. That's why we put that information on our website so people could look at it and understand them. So with the CCI, you look at past history. This scaling over here is not nearly as important as it is with other indicators because it's different for every individual stock. What matters is where have the historical peaks been. And so you can see that we have room here. So, I mean, you just can't really look at the Qs and ask for a better setup than where they are right now. And for me, that's an entry signal today. So if we look at the 10-day moving average, not really too far away from the 10-day moving average, certainly makes me nervous to see something a touch more vertical than I would like. So, you know, a consideration would be a spread, which depending on what happens tomorrow, the futures are on the SPY are up 4 3/4 right now. So up a little bit, but not too much going on. That our alert subscribers could see a call spread come out on this. I think a spread is warranted. For one, the amount is, you know, trading at 355, so it'd be expensive to buy just straight options. Plus the risk of a bit of a pullback, because you could easily see a pullback to test this break here at 340. So it could easily come down there. So if you have a spread, then you could use that opportunity to take off the short call and add to the long call for a move back higher. I'm not saying that's going to happen. I'm just saying that could happen. But you definitely have very good support from our confirming indicators. So yeah, the Qs, today was a big day, breaking above 20, and it looks really good. Then the IWM is what others have asked to show. So we're going to try to start taking a look at those markets. Once again, totally different. Doesn't even look that much like the SPY, more than the Qs, but you take a look here, we're going through a bunch of sideways consolidation since the high was hit back in March, and the extension here was only 28%. Now this is where Elliott gets a little more, and it's why we try to really explain Elliott Wave to our subscribers from a trader standpoint, because it gets really, really technical and involved. Technically, this wave 4 labeling here at 24%, that's a fib level, 23.6. So it labels it. But if you really read what Elliott wrote, he wasn't a big fan of a 23.6% corrective move. He plays much more faith in a 38.2% corrective move. But he acknowledged that, hey, that's a Fibonacci level, et cetera. So you have to pay attention to it. But there you can see this is exactly why, in my opinion, he wasn't that fond of it. So to me, this shows you two issues here with the 23.6% correction. One, here we came right back down. Secondly, there's that vertical move. Now that's more vertical than the Qs are. Granted, the Qs look better than that, but there's a vertical move, and what happens? It comes straight back down. That's why I don't like vertical moves in anything. We'll go straight up, quite often comes straight back down. It did. So I think all of this ties into Elliott's observations in examining the markets. So what it looks like to me is that in the IWM, we have this massive ascending triangle here. That wasn't a very straight line there, but you get the idea. So we have a lot of resistance here just above 230, and we have a set of higher lows. So the IWM, the Russell, looks like it wants to break out. If we take a look at the DMI, the ADX is getting down there to where, in fact, it did break 13 today. So it looks like that could also be an alert that goes out to our subscribers tomorrow with the fact that the ADX finally dove down low enough to get into the area where it qualifies with our indicators and what we look at. So you've got the IWM that looks like it wants to make a break one way or the other. You've got the SPY that's continuing to go higher, but on no volume. And then you have the Qs, which look really strong. They're rocketing ahead, maybe even a little more vertical than you'd like, but they're backed by good indicators. So you have three different markets here showing three completely different patterns, which is really kind of interesting in the grand scheme of things. So which way do we go? We'll just have to wait and see. All right, so that's covering the markets. Now, I did want to show you this. There's some news on POWW. We closed this out for our subscribers, as you can see, back on June 23rd. So our entry here was based on a pretty interesting pattern, I think. When you take a look at it, wave 4, so we're in a wave 5, but we're going through some choppiness here. So we've got some flats underneath a really important resistance level at 8. But when you looked at the DMI, very similar to the DMI on the Qs right now, right? It was supportive of a break above that level. So we bounced off of it how many times? It broke above it once in February, but it had a problem with it in January. February it broke through it, but it couldn't hold it. Came back down. Tried it again in April. No good. Got close to it again in the end of April. No good. Then we're back up here again in June. But now we have a DMI that's suggesting that we're going to break above that level. So we said, okay, and sent out an alert, and it did. And it broke in a pretty significant manner to the point where it was a bit overbought from the 10-day moving average and closing with a doji, which could mean a reversal back down towards the 10-day moving average, which is what happened, by the way. So at that point in time, it was a great exit. Now, just to update this one, so we were happy, right? 52% in 8 calendar days. Remember, these are calendar days, not trading days. So you have maybe 5 trading days within there, 6, depending on what day we sent it out, what day of the week that was. But there's your mark-to-market graph. Didn't spend very much time below the zero line, which is great when that happens, and just moved up, did what it was expected to do. So you'll take 52% in 8 calendar days every day, all the time. Well, Powell reported earnings after hours. They expected to have flat earnings. They made 4 cents. So the stock peaked at 9.96. It closed, or looks like it's going to close the after hours session around it did at 960. So it's going to be back up in the area where we closed it out. So if by chance you were following along with this one and hadn't closed it out yet, you're going to get another opportunity. It looks like tomorrow, depending on what happens pre-market, but after hours, based on the earnings report, it did get a little bit of a pop. So might even exceed a little bit the price target where we exited it. So I just wanted to share that with you. But that was the reasoning for our exit. It clearly was overbought and it did pull back, but maybe getting a little bit of boost from the earnings after hours. All right, so that gives you an idea of how our alert process works, especially if you're considering that offer on the volatility portfolio. All that information is included in each and every alert. You get the charts, you get the strategy, what it is, the contracts, what the strikes are, and that's for opening, any adjustments, and closing. We aren't just an open only like some alert services are, where they just send you out the alerts and that's it, and you pay for that. Well, we kind of cover that in the TradeFinder for free. So we give you far more information, and we feel like we have some pretty good quality education so that you can learn how to do this and trade on your own moving forward. So those are the markets, and let's go through and look at our previous case studies, considerations. So we'll go all the way back to DBI. We've cleared out a lot of these, and we're going to clear some more out tonight. So we won't have as many from the past as things are starting to move. But DBI back on the 4th of May was sitting there at 1878. And it moved a little bit higher, probably not enough for anyone to have taken a gain. And then we got a wave 4 correction. Been moving up from there, but came back down over the past couple of days. Looks like we're going to come down and at least test that wave 4, possibly bring it all the way down to a 38% corrective level. So I don't think anyone that was long this would have exited on that move, would have needed a bit more. Also, on the same day, we looked at Love. So we're going to cross this one off because we did send this one out as an alert to our subscribers, and we've closed it out. So we closed this one out yesterday, and you can see there's the move to the downside. So it broke down, came back and tested it. Just really kind of normal stuff here. It's frustrating when it takes a little bit longer. You'd love it to break out and keep running. Sometimes it does that. Sometimes it comes back and tests it. So it broke out, tested the breakout, and then it's been moving lower from here. And that generated a very nice gain for us out of our strangles. Pretty interesting to have a downside strangle when the market has been moving to the upside. A lot of people comment how, you just trade the direction of the market because the majority of stocks follow the market. Well, that may be true. The majority of stocks do follow the market, but not all of them. So here we had a downside trade work with the market moving to the upside. So that's kind of cool. Imagine the speed with which these move, which I've kind of been teasing our alert subscribers with, that when we do finally get a correction, not what we had in March of last year, where you have a crash in 1 month, which recovers just as fast. That's not what I'm talking about. I'm talking about where you have a normal corrective move, where you have downward impulses, upward corrections, downward impulses, upward corrections. Well, when you get the downward moves and those impulses, stuff moves a lot faster than it does on upward impulses with downside corrections. So that will happen at some point in time. We'll have to see if the market is done here or if it wants to go a little bit higher before then, but that's pretty cool. So that one's done. And if you're staying in that one, you're probably getting a bit greedy. So then on the 11th, we did POLY, which was PLT at the time. And this broke to the downside. It didn't quite generate a profit, so we didn't do anything. We held on to it. And so now it looks like it wants to break to the upside. And it was interesting today, the brokerage firms sent out a note that there was some call sweeps, bullish on the stock today, which were, you see the unusual activity, you hear a lot about that. So some people think it's going higher from here. So maybe the big move ends up being to the upside rather than to the downside. At that point in time, you could take the puts off. But with this consolidation, we're just going to wait just a little bit and see what happens over the next day or two, because so far it could be just a test, the same thing that LUV did, fill in that gap, run the test, and then it turns back to the downside. But we do plan on adjusting this one way or the other by taking one side off, but not till it's prudent to do so. You don't want to jump the gun on doing that. If you had taken the calls off after that big move, that would have been problematic. And so then on the 18th, we looked at MGA, which was another strangle. So we found them here. So there's another false breakout to the upside, moved back down, came up, tested, and now we're heading lower at this point in time, it looks like. So we'll have to see how far this goes. The mouth of the triangle was the 10 points. So we haven't quite broken that yet. It almost did it to the upside, but didn't quite. And so that's kind of a similar thing to Plantronics, where it got close, but not enough. And so we'll just give this one a little bit more time to move. If you take a look at the DMI, you can see it's diving back down. So it does appear that it wants to reset itself and then try again for a directional move. SeaWorld hadn't done much for a while, and then boom, look at that. Big move down yesterday. Actually, a bit of a move on Friday, but big move down yesterday. Now, does that count as a follow-through day because it traded lower? To me, no, because the low didn't take out yesterday's low. I could have handled that with a lower close if today's low was lower than yesterday's low. So I still think you got to be a bit careful on this one. So certainly wouldn't want to take the calls off yet, especially with the fact that there's an awful lot of support resistance there at 50. It did break it. It did break it again today. I just would have preferred the low to have taken out yesterday's low. We do have a gap down here that hasn't been filled. But the exciting thing, and always has been about this one, is if it can drop just a little bit more, then it goes into free fall because it was such a vertical move to the upside from 35 to 50. It'll be just as vertical coming back down if the stock's able to break just a little bit further from all of this noise and consolidation there right around 50. But it's nice to see that one finally starting to move. We had Walgreens, and you can see that one broke down, tested, broke down again. So very similar to LUV here. Why these stocks are deciding that they want to do all these tests is interesting, but no real rhyme or reason as to why. Sometimes you have them where they break and they just go. I think that's going to be what happens when the market makes this move. Again, whether it's up or down, when it makes this significant move, all these triangles are going to make significant moves. So here was the XLF. The KBE moved enough, but this one hasn't quite, I don't think. We looked for 10%, so 38 down to above 35 wasn't quite 10%, and it had a gap, so it got a little bit oversold, and so bounced back up. We're hugging that 50-day moving average, and with interest rates starting to come back down again, compressing the spreads, very difficult for the banks and financials to make money. So you can see we had a really brief attempt at an upward move, but this looks downward all the way. In fact, that looks like it's forming a zigzag pattern on its move lower. And so there would be your target down there, and that would be great. So that would be enough to generate a very nice gain. That's what ends up happening. So ASAI, we were looking this from our momentum search, and we were trading there at 1727. It did have a brief pullback, but we were back up to where we were on the entry. And so it just needs to break above that previous wave 3. Here's another reason why we like the follow through day, because we did close above that wave 3. That's why the 5 is fully labeled, and then it didn't hold it. So no confirmation day, no follow through on the break above the wave 3 high. And so we back down and consolidate again, circle the wagons, as they say. And it's holding that important 17 level and set for potentially a run up to that 19, which is the target. So looking much better. NVO, I've mentioned that I was looking for an entry point here because I really like the setup in the chart, and it wasn't really giving one. And then we had this big vertical move, and we've come down and consolidated that a bit. And I like the looks of this move a little bit better. And if you look at the DMI, the ADX has come down a bit. It was just a little high up there around 85, but it's come down. There is separation, not a lot, between the ADX and the positive directional indicator. And if we could get that positive directional indicator to move up just a bit more vertically, the ADX, or excuse me, the negative directional indicator is moving lower. That's all good. So this looks like it's setting up for a DMI that would be supportive of a run back to 90. Now, that's not a big move out of the stock, but it could be a good entry in the not too distant future. A little bit of a doji there on today's chart. So we'll see how that translates in tomorrow's trade, because we're really not overbought from the 10-day moving average. But I watch this one. It's on my watch list every day to send out a potential alert on. We did send out one of our out of the money call butterflies, which are directional in nature. You take a strategy that's normally an at the money strategy for a stock to go in a trading range, and you move it out of the money, which makes it directional, which means you can make money by being right on the direction and not just having it stay within a couple of strikes moving sideways. So there was the entry, and hasn't really done a whole lot since we got in. So the actual entry date, if we walk this back, was on the 8th. And so, yeah, it's drifted up a little bit, but not much. Take a look at the DMI. The ADX moving down. It's not ideal, but it's also gone through pretty significant consolidation. Look at the 10-day moving average, and all of this consolidation on top of that last little point of the wave 3 high that existed back there on April 28th with a pivot point consolidating here. Looks to me like it's getting ready to make a significant move higher, which is why we have the position to capture it. Now into it, we're going to cross this one off. We're done with this. You look at this back on the 8th, it was trading at 465, and now we're up at 490. 491.66 was the high today, closed at 491.40. So that's we're done with that one. If we're long this one and you haven't closed it off, again, you're being greedy. So let's go ahead and cross that one off our list and say, hey, that was a good one and nice gain there. If you're wanting to know, could it go higher? Look at that ADX. So why haven't we chased this one? How do you do that? I mean, how do you send out a position when you've got an ADX that's way outside the positive directional indicator? It's not prudent from our technical trading system. People can look back and say, yeah, well, it moved up 30 points. Yeah, well, great. But it's to the point now where it's flashing signs, overbought, overbought, overbought. The strongest part of the move is over. It's not severely overbought based on the 10-day moving average, but it's definitely to the point where the strongest part of the move is over. Can it get to 520? Possibly. Stocks just don't necessarily have to stop when it shows the strongest part of the move is over. They can still creep higher, but it would be in my opinion, a low volatile move. And I just think that, again, if you stay any longer there, you're just being greedy on that one. So VET, we looked at that back on the 15th of June. That was expected to move higher, closed at 923 on the day. And now look what's happened. Now we've basically formed a triangle. And I mention this all the time, but I think it bears repeating. Elliott always talked about pay attention to the small triangles. Everybody looks for the big ones, for the breakouts, like we do for our triangles in the volatility portfolio. But don't dismiss the smaller ones because they work too. It doesn't work as well for our strangles because we do need some sort of a movement. When you only have a dollar wide mouth of a triangle, it's not really enough to put a strangle on. But Elliott would say this is in a wave 3. It's got a consolidating symmetrical triangle. It's likely to break to the upside and hit that target at 10.5. So our method here would be, let's let it show us, the Missouri show me state. So we'd call Missouri on this one and let it show us that it breaks out, and then potentially trade that with it. But then we're already identified this as a long position. At this point, we would just be hanging on. MMC, also on the 15th, you can see that high was at 140 at that point in time. Pulled back as we identified last week, but now we're right back up to where we were exactly. Basically back at 140 close. So no harm, no foul. We're right back to where we were. And you look at the DMI, the ADX had come down, is curling back up. Looks like maybe it wants to break above that 20 level. So we could be off and running here if it can break above this level around 140. And so then last week, we looked at VCTY, and this came off a bearish wave 3. Remember when we have the consolidating search, usually we get a lot of them. We'll look at it again here in a few minutes, and often look at the bullish wave 3. It's rare that you get a triangle in a bearish wave 3, and that's just because when stocks move to the downside, they really tend to move pretty quickly. So you don't really take enough time to create a triangle within a wave 3 to the downside. They're just moving too fast and doesn't usually consolidate. Well, this was one of those rare opportunities where it did. So they don't show up very often, but this was one, and look at that. Pretty nice breakout. So if we go back to where we were at 38.56, and yesterday closed at 41. That's your move that you're looking for there. So a proper exit would have been yesterday on this one. So we're going to go ahead and take that one off our list too. Interesting that the breakout was to the upside in a downward wave 3, but hey, it created the wave 4. Look where it went, right to the 23.6% level. So I said this in the last market update, but if you're not incorporating this Elliott Wave Fibonacci stuff into your trading, you're really missing out. It's just been so spot on lately. It's amazing. But there you go, right to the 23.6% level and stopped. So it hit its head right on that fib level, just as you would expect it to do. Now, Autodesk, we sent this one out as an alert to our subscribers. You can see that it's broken to the upside here. And if we look at the DMI, looks like it's wanting to form for a continued upward move here. Not there yet. The ADX has broken above the negative directional indicator, so it was down here below 13, which is our preferred level. But remember, for this to be a signal for a strong trending move, the ADX has to break 20, so it's got to get up here. It's not there yet, but it needs to get there. Separation between the two directional indicators looks good. Looks like this one wants to continue higher. So a comment would be, well, why don't you take off the puts? Well, my opinion, it may be a bit conservative in some people's view. We're not really too far away from the 10-day moving average, so you don't have to worry about overbought status right now. But there's resistance right there at 300, in addition to it being one of those big round numbers. If it can break above that, then there's probably stops there. Based on what happened back in December last year, February, April, all those time frames where you have resistance. I'm quite sure that there's some shorts that have that 300 level targeted in, probably a little bit above it to give it some room as stops. So if it can break above that, then I think we have something. So if it breaks above 300 and we get this ADX breaking up, then that would be an opportunity to take the puts off. I just think it's too soon now. Just let it continue to play out. And we also sent BYD out to our subscribers as an alert today. You can see that this is what we looked at last week, and between last week and this week, all it did was consolidate more. And you can see the ADX down here, just really tasty, being below 10, starting to curl up a bit. So maybe we're getting that. Did you see the volcano that erupted in Costa Rica? I thought about that with that volcano analogy that I utilize a lot, where we don't know what's bubbling underneath, especially when we have these triangles. They just look quiet. Stock looks quiet, like it's not doing anything, like an inactive volcano, but we don't see the lava underneath that's bubbling up, and then boom, you get the eruption. It explodes, and sometimes this ADX that ticks up before the stock actually breaks is an indication that something's getting ready to happen. So with that in mind, felt it was time to go ahead and sell. I really like this one. I think that's a great looking pattern, pretty wide, 15 points on the mouth of the triangle for $60 stock. That's a good size movement. So I think this one's really good. That's where we've been as far as past case studies. Catch you up to date if you are new with us with TradeFinder this week. And so now the process is we go through and take a look and see if we can find any case study considerations for this week. Used to be we were staying pretty tight to just one. You can see that we've had and we've crossed off a bunch. Just on my list, 1, 2, 3, 4, 5, 6, 7, 8. Just in the past 2 weeks, we've crossed off the list of stocks that have moved. So kind of been doing some bonuses here of giving more than one. That was never the idea. The idea was just one case study consideration each week. If you go back and look at our past history, it's been pretty strong. We've had a lot of subscribers that did that, and they actually became alert subscribers based on what the past history had been on this webinar, TradeFinder. So if we take a look here, the first thing that I like to look at is the momentum search, and that's dwindled down over the past couple of days. Over the weekend, there was 10, then 5, and now today there's only 2. And you can see that there's CommScope and Castlight. I tend not to know these as much because the idea of this was to try to create a more technically based version of, all that Reddit stuff where they're looking for low dollar stocks that have high short interest, and that's really it. That's the only criteria. I don't think that's enough, and I think there's a lot of people made money, a lot of people got burned, and that's usually the way it works there. So based on that, we wanted to try to create, for people that are interested in the low dollar stocks, some alerts for more technically sound charts rather than just heavy short interest. Sometimes the shorts are right. You've heard me say the shorts are smart. They're not stupid. So, the Reddit, Wall Street stuff that needs institutions to help move them. They're not strong enough to do it on their own. So here we are. We're at 5 right there at a point of resistance. Let's see, we close at 505 today, so I don't think that really counts. You would want to see some follow through tomorrow, but take a look at that DMI, how well formed that is. ADX broke 20 today. Good separation between the 2 directional indicators. So that looks like it wants to continue up. Now that chart looks good, doesn't it? It looks like, hey, we got a ways to go. But the target price is only, 575, 580. So at 505, not much of a move here. I don't know if this is even worth putting at risk capital unless you just bought a ton of in the money calls, maybe to try to, I just don't know that there's enough movement here to really make it worthwhile. But interesting chart. It'd be interesting to see if it goes up and hits its target. There's room with the CCI as well, so looks like it could. And for those of you, by the way, that are interested in this software program, it's called Profit Source. You can find out more about it at profitsource.com. And over here on the left, where it says Elliott Wave options, and these searches here are new ones that we just created. That is something that the hub organization that created Profit Source did as a courtesy for our Elliott Wave option subscribers. So those that are alert subscribers with Elliott Wave options and have Profit Source, they created these, and these ones that have EWO on there, those are mine. Those are my searches that I've used to trade. It's how we've built the track record with Elliott Wave options. It's what we utilize in these TradeFinder events. And so there you go. You can actually get my searches as an alert subscriber. If you're not an alert subscriber and just have private source, then you don't get these. So it's for those that have both. But then there's some cool things that are added in there too. You can add the ADX moving up into your own set of, maybe you got your own favorite indicators that you like, include them in there. Bullish and bearish wave 3 patterns. Lots of different things you can do to create your own search if you don't want to follow along with mine. Like I said, a lot of people have their own indicators and might want to try to find a search around those. So let's look at the other one, Cast Light. I still think being around strangles makes a lot of sense right now. We did throw in a couple of directional things, but right now, especially with the look of the volume, I think strangles make a lot of sense. So let's see if we can find another good one for tonight. This one is trading above, and here's another really small move, 231 it closed at, and the target is under 275. The ADX is way too high. Not interested in this one at all. So okay, so we took a look at it. That's usually what I do on a daily basis. Now you come over here and see consolidating stocks, 105. That's a lot. And that's why you can put an X in there, which means there they are. There's all 105 of them. How much time would that take? That would take a long time. But then you can come up here and click bullish wave 3, and it takes that 105 consolidating stocks and whittles it down to what, 2, 4, 6, 8, 10 that are also within a bullish wave 3. You can see there's a lot of stuff that has to do with bonds. Look at that. The majority of them are bond ETFs. Wow. That's really pretty amazing. There's only 2 that aren't. I just want to see what this high yield bond chart looks like. That's pretty interesting, isn't it? So I don't know how bullish that is for the market if bonds are going to continue to rally. I posed a question in the last update, if interest rates continue to go up, because they did try to catch a bid after that Fed meeting, what would that mean? Money coming out of the bond market, does that mean it's going to go into the equities market? Or would higher interest rates stall the economy, which it normally does? The argument for the long side obviously being, yeah, but interest rates are really low right now. So even if they go up, they're historically low, shouldn't be enough of a headwind. Well, I'm not sure we're going to have to worry about that by the looks of all of these bond stocks here. Maybe it's getting ready to make a significant move though, because it is the consolidating search, not the momentum search. But really amazing that there's so much consolidation going on. And you don't see the bond guys get indecisive very often, but that's what it feels like with so many results. So insight here is just sideways. That's not really a triangle pattern. Thought we'd take a look at that. Really like the low ADX though. It was really down there. And then I'm not familiar with this company, Moelis. And you're getting a little bit of that gurgling up there with the oscillator. Perhaps this one could be looked at as a long position. Maybe that wave 5, because it hit, there you go, 38%. It's everywhere. The Fibonacci Elliott Wave stuff is everywhere. You can't ignore it. It hit it, came back down, consolidated for how many months after it ran up and hit that 38% fib level. Now it's trying it again. So it did break above it on the high today, couldn't hold it, came back and closed. It did close at a new high, but well off the highs of the day. So there's a chance we need that ADX to wake up a little bit more. It's kind of snaking, little snaking looking pattern there. Maybe that's why I couldn't hold it, because yeah, it needs a little bit more room, a little bit more oomph or strength behind it to move to the upside. Not quite there yet. So looking at it, I think that maybe want to wait another day or two and see if that ADX sets up, and then look at this as a long position rather than a strangle There is certainly an ascending triangle pattern there. Just don't know that it's big enough. Maybe barely. 49, 50 to 56. You can make a case for it, I suppose. Break to the upside today is interesting. Let's take a look at the options. Just really not familiar with this one.
Sorry to interrupt, Rob. Just wanted to remind you of the charts. We've had a few subscribers come through.
All right. Thanks. Appreciate that, because it's probably getting pretty close. There is a lot of them. Let's see what the options look like on this. Huh, not bad. October would be a pretty good month. Not as many strikes for January, but we don't care about that anyway. So there's not a lot of months here. And the spreads are a bit wide, aren't they? Yeah, so yeah, forget that. Not interested in this one. So let's move back. We'll go ahead and cross some of these off here. If you're new and you're wondering what we're doing, there is a virtual memory limit here. And when you get to the point where you open too many charts, you have too many things, kind of like with your computer, if you have too many windows open, the virtual memory in your computer, the stops working, and it takes forever to load stuff. So close some open windows down. Same thing here. If you have a lot of open charts, creates an issue with the software. So leave enough open memory so that it doesn't cause an issue there. All right, so let's go back to the scans. Let's just take a look. I mean, we had one last week and it worked well. Let's see if there is anything on consolidating that's in a bearish wave 3. So nothing, that's normal. It was odd that we had one last week for the reasons that I mentioned earlier. So we'll rehash that. So let's just take a look through here. Big lots. I see that right off the bat. Had success with that one in the past. So as soon as I see that one, I want to take a look, and I like that. Well, we're going to find our case study for this week pretty quick. So the ADX is it got down to 8. Look at that, and it still didn't break out. So I think this is this is a really good lava example here of the ADX is gurgling. It kind of, maybe that was a blow off little steam, kind of a warning that we're getting ready to blow here. But with all this consolidation, and then you come into this point with this big wide, it's not the largest triangle from the number of weeks that it took to form, but it's big from the size. I mean, we're down at a low of 58 to a high of 73, so 15 points, and that's another really good one. So I'm going to write that down. That's going to be our case study consideration for this week. So on 6/29, we're going to look at BIG as a triangle. I like that one. I think that the stock can move, and so I think it's good setup. It had a nice run up and then went through a lengthy consolidation. So you've got a lengthy sideways consolidation capped off with a nice symmetrical triangle. Kind of looks like an arrow, doesn't it? I mean, you look at it this way from the consolidation, moving into the point, looks like you're forming an arrow, like it wants to break out. And I think it does. I think this was just telling us it really wants to. All right, so got a few minutes left to take some questions. Doing my best to keep these to an hour. Tend to struggle with that, but we have a lot of case studies that I want to, it's good education, right? I mean, following along, what's better education than following along with these updates? I mean, that's how it works with our alert service too. But we're sending you all of the particulars, and so you follow along with them in their learning processes as well. So I think all that matters. So let's look at AT&T, Angel or Angel. I want to make sure I pronounce your name correctly. Earnings on July 22nd. Is that a launch pad? So if you're fairly new, This is something that I kind of coined. The launchpad effect is when a stock consolidates very sideways. So I live on the Space Coast in Florida, so near the Cape. And so it kind of ties in, right? Is another one of my analogies that when a stock consolidates sideways, it kind of acts like a launch pad, and then you get a blast off move. Happens a lot, as our subscribers know, and that's why they're making comments on it. And then you can see there's the descending triangle there. It has gone sideways. I don't know that that's long enough to be the launch pad. It came just a little bit below 29, but I certainly see what you're looking at. And it is a nice descending triangle. And you're correct, you do have a gap here. And could it go up and fill that gap following earnings? Absolutely could. You know, in a different formation, you could really talk about that as a massive area of support. That goes back to the end of last year, where it's finding support here. So I guess this, I don't know what this was here, if the earnings. So it wouldn't have been another earnings report. So this would have, I don't know what happened there. But yeah, easily could do that. It's good looking. It's just where's the ADX? Yeah, that looks good. Good one. So yeah, Charlie, we already looked at the IWM and okay, says TSM, Taiwan Semiconductor. Yeah, you don't see this one do that very often. It consolidated back here the summer of last year, but that was weird, right? So it's hard to count what occurred in 2020 with anything. And man, there's so much strife over that in that area right now as well, political strife. So yeah, ADX down at 11. So you're right, it's a really low ADX, pretty decent looking symmetrical triangle. Yeah, I like that one. I like that one as well. $115 stock. I'm not sure how expensive the options are. We might need to look at that one in our high value portfolio. So we have normally for our alerts, we try to keep each alert at $500 of risk per alert, and that sometimes precludes higher dollar stocks, especially if you're staying within the math, the delta and gamma of our strangles. So we have what we call high value for those that have maybe larger accounts that would be willing to take more risk than that in the position. So it's personal choice. And you can see that there's plenty of strikes here. Just wanted to see what the cost was. They don't look that expensive. September, October. Look at October if they're not that high. In 25 delta, you could do this one for pretty close to the $500. Put side might be a little bit higher. I should just move it over there. Sorry. Let's go take a look. Move it over here to the put side. October. Yeah, I mean, it's not that expensive. And you might could go 19, 18 to keep it under the $500, or spend a little bit more and do it in the high value, but the spreads are tight. There's lots of strikes. Yeah, that one looks good. Good call. So my answer would be, I think this one looks like it wants to break. SPXL. Asking about buying a call there. Suresh, I think I would just see if we can get some volume to come in here. I would hold off right now. It sure looks like that DMI is setting up well. Let that ADX get above the negative directional indicator. Let it get above 20. Yeah, maybe you miss a little bit of the move, but if that sets up for a strong move, there's plenty more to go. And it would be more prudent just to be a little patient here, because that, is mirroring the S&P. And so it looks, it's got that same sort of running out of steam kind of look here, a little more vertical, tiny intraday bars. So it's either going to explode higher or it's going to come down and correct a bit. So I think I would be just a little, let that DMI give you the confirmation. ETSY. Wow, nice move. And we had that one written down, didn't we? We looked at that one a while back, Pankaj. So nice blast off move there. Not sure how much further you go. The DMI is suggesting potentially for more upside. We're getting just a little bit overbought, so it might want to rest a little bit here before it continues up. Likely the target is going to be back here. So this one consolidated, broke out, and then went through a really tight consolidation. Wasn't nearly as pretty of a triangle as that one was. So there's the target. It may do that first because stocks can stay overbought for a period of time. So it may run up there and hit that 210 first. But I mean, the ADX hasn't even broken 25 yet. It just broke 20. But it is a tiny bit overbought, and it's got some resistance at 210. But you can make a case for if it rests here and the ADX moves up a little bit more, that it blows through that. But that being the breakout point from the previous triangle satisfies the Elliott Wave triangle, retracing the breakout move. So yeah, be careful into a solid break above there. On Riot, yeah, we sent out, we had this one as a strangle, and then we adjusted it and put on a call spread, which it backed way off, but our call spread was fully in the money. So we had a 30-38 spread, and it was trading at 40 intraday. So it's like, the only thing that's going to help you now is time. So with a stock like this, that's as volatile as it is, do you really want to sit there and wait and see if it churns away some of that time premium? Didn't make sense. So we went ahead and took a smaller gain since it was a spread than just straight calls. But it's a volatile stock. Could it go further is the question. I would want to see some confirmation from the DMI. It's not there yet. I think it's a little telling that it closed well off the highs today and actually closed below the open. So that's not a real bullish signal. It got a little bit away from the 10-day moving average, so you could make an argument. It just got into that overbought area. It ran into a little bit of resistance here that exists from April, right there at the 40 level. So if it consolidates a bit, maybe fills this gap, gives that DMI a chance to set up. It's not too far away. The ADX isn't that far from 20. It's not that far from breaking above the negative directional indicator. There's already a good separation between the two directional indicators. All that stuff looks good. But I think it's, all right, it's, again, the Missouri thing. Show me, let's wait and see. And we got our nice move. Spread worked out well. And we'll just see. I just think it needs a little bit more time. Robert, on your Coinbase, and we had talked about this one, and we made the comment: should it be moving with Bitcoin? Probably not, but it is. Bitcoin's come back a bit, and so now this was starting to move, and just not enough data to really trust the DMI there. But I made the comment before that when you get an opening print like this on an IPO, when it first comes public, that it usually comes back to that level. So I still stand by that. I think it sees 420 at some point in time, but that could be a ways away. I am not in any way calling that, as a move in the near future. Maybe it is. Just at some point down the road, if it follows what normally happens, it's going to get back there and trade there. It took Facebook forever, and now look where it is. To get back to its $35, I think it was 35. Its IPO, and it took forever to get back there, and then it took off. So I'm not saying this is going to be the same thing. I'm just saying that at some point it's going to trade back up there, but it is making a nice move now. It's a little bit overbought from the 10-day moving average. There's enough data for that. And it's got a tiny bit of resistance here, but just being really picky right now. It could easily run up to 280 before it consolidates, or maybe we consolidate here just a little bit. Yeah, but I'm happy for you that it's finally moving back to the upside. Andrew wants to look at Baidu. And we talked about that one before as I forget whose pick it was now. One of the gurus came out and said they liked this one. So it's broken above important resistance there at 200. That was key, but it's got more at 220. So that's where it gets really exciting. If it can break above 220, it could be off to the races. It could be really ready to go. Decent looking DMI right now. I wish that ADX would have come below 20. Surprised that it didn't, with as long as it's consolidated for 2 months. But that wasn't enough time. The ADX kind of hung in there. It didn't really dive down. I would have preferred to see it dip below 20 and come back, but that's just kind of a personal preference thing. That's not that big of a deal from the indicator itself, the DMI. But for me personally, I'd want to see it break 220 with a DMI that still looks pretty sound like that. And then, man, it could be gone. It could really run at that point in time. But it's got some resistance there at 220 that it's got to break through. So JC, I don't know if you asked that or if it was just a comment on the charts that I showed, the S&P versus the IWM and the Qs. Money rotation going into the Qs. Yeah, I think I agree with you. I think that's exactly what's going on. How long does it stay there? I don't know, because it wasn't massive volume, was it? It was just a little bit better. It's still below average, but it was just better than the SPY. So some money is going in there, but that's not enough to really spur significant moves yet. It's got to come in. Maybe it does. It may. Brian, I'd ask you to contact Hub Support on those questions regarding profit source and the database. Crowd, figured somebody was going to ask about that one today. I don't know why, I just had a feeling. So we'll look at it, Juan. Pretty nice consolidation there right under the 260 level. Still, I mean, that has not hurt the DMI that much. The ADX is still climbing. And so I still think this one wants to go to 300. We cleared this is pretty healthy stuff here. We cleared the resistance there and it's consolidating right on top of that clearance. The DMI still looks good. I just think one day it bounces. And if it's going to go to 290, I can't see it not going to 300. That would just be really surprising to me. You know how I feel about the law of large numbers, if you will. That's not what the law of large numbers is, but these big round numbers just act as magnets and draw stocks to them. So to see it run up to 290 and not go to 300 would be shocking to me. Palm Beach Gardens, nice area. Emilio asked for WAB. Take a look at that one. And we'll take one or two more and then we'll wrap things up for this week. Not too familiar with this one, so anxious to look at it. It's in a trading range right now, so 77 to 85 is your range. So we got a lot of resistance right there, and then we got a lot of support right there. Man, that would have been I always talk about how hard it is to create at the money butterflies. It just, by the time you identify that we're going sideways enough to create a trading range like this, it's due to break out. Let's see where the ADX is not even at 15 yet, or it may be right there. Maybe it broke 15. So it could stay in a trading range for a little bit longer with the low ADX. See, when it got down there before, it tried to run, but it couldn't break out above 85. So this one's pretty easy. I think it's too far along. in the consolidation to do anything, but what a great 85, 80, 75 at the money butterfly that would have been. That's what you want out of an at the money butterfly, if you can identify it enough ahead of time to see what's happening. And maybe you could have here, on this one, this would have been one that would have been easier than most, I think, to identify a stock that's going to go into a sideways pattern, because it had all this support, then it ran up here, hit resistance, came back down, tested it again, came back down here. And at this point of the support, I think you could have reasonably assumed that you're going to go back up and test that resistance. So somewhere in this area here, end of February, early March, you could have looked at doing an at the money butterfly, and it would have worked out really, really well. They're not very many that are that clear cut. So if we look at the Elliott Wave pattern, the wave 4 is corrected right at a fib level, but it couldn't break through that wave 3. There's not enough strength in the DMI to do that. So your target levels here are breaking above 85 or breaking below 77. So if it breaks above 85, then you're going to go hit that wave 5 target. But it's got to do it first, and the DMI is not supportive of it yet. So final comments on here is I think it wants to consolidate a bit longer before it makes its move. That's the way it looks like. Melbourne Beach. Wow. Snap, and we'll go ahead and let that one be the last one for tonight. And again, if your question didn't get answered, I apologize. There's limited time. I go over our time every time anyway. I try to do as many of these as we can, but please understand that it doesn't mean your question wasn't important. It just means we ran out of time. So taking a look at this, wow, where's the ADX here? That's why it's not on the search. It didn't get down. It never got down to 13. So this is going to be a really interesting one to watch. In fact, I'm going to go ahead and put that one on I want to show you BKNG that I put on the watch list last week, and why we haven't done anything with that, because it's pretty interesting. It's got a neat story. So I'll show you that one real quick too. But we'll put Snap on the watch list as well. And the reason that I say that is because that's a great looking ascending triangle. I mean, a really good looking ascending triangle. But that ADX is already breaking above 20. That's very suggestive that you're going to get an upside break here. So I think rather than putting a strangle on here, I would just see if that DMI foretells an upward breakout. And then if it does break to the upside with that DMI setting up, you trade it long. And it's got clean air, right? The racing analogy. So it could really run if it breaks above 70. It's got to do it first. So I think with that, the height of that ADX is showing some strength there. I would let that one break higher and then trade it long rather than doing a strangle. And I think that makes a lot of sense with a higher ADX. So I did want to share this with you real quick. BKNG, want to do something with this in the worst way, especially with that downward move that occurred in Love. The airlines are going down like that. What's that suggestive of? Another thing that I meant to mention in the beginning, back in January of last year, we did our Elliott Wave forecast, and you can go back and look at it. Made the comment in our 2020 Elliott Wave forecast, we had some black swans, and one of them was the coronavirus. Way before anything really got significant with it. It's just keep an eye on it. It just seems like it could become something, and boy, did it. I mean, that was, pretty good crystal ball stuff there. This Delta variant, I mean, the media is playing this up. I'm not a doctor. I'm not in the medical profession. I don't know how concerning it should be, but the media is really playing it up. And if they sensationalize this thing, there's talk of people that have been vaccinated have still gotten sick. There's all kinds, you don't know what's true and all, but man, there's a lot of stuff out there. And I'm just wondering why the travel stuff that you would think should be opening up and looking really good, why are these stocks not performing better? Why did Love break to the downside when, could be oil. I get it. It could be that cost, but it's just an interesting thought. And I think that's another potential black swan if this Delta variant becomes something to where they start I don't know that they're going to shut stuff down again. I don't think they'll ever do that. But if they start doing the social distancing and limiting and stuff again, man, you talk about a catalyst for the correction. That could be it. Just something to think about. Again, I don't comment on as any kind of an expert on that whatsoever. Just noting that the swell is occurring very similar to what it was with COVID back before it became a big deal. You see the big descending triangle there, but I really want to trade this to the downside and take advantage of that. But it just won't let go of this support here at 2,200. The wave 5 extended. We looked at this one last week, right? The wave 5 extended 111%, which means a 61.8% corrective level, but it won't break the 50. So the 50% corrective level, it just keeps holding that there. So I'm watching this one really closely. It's a little bit oversold on today's move. Not too bad, but a little bit. But if this breaks through this 22 level, I think this could have some significant move to the downside. I think that could be a really good bearish trade. It is something's going on. It's just a feeling. That's all. Just sharing that with you. All right, that's it for this week. Thanks as always for your attention. Appreciate it very much. We know how valuable your time is. As a reminder, last chance, take advantage of that special for the volatility portfolio and get the masterclass included. Live Q&A next week. Perfect timing. I think it makes sense right now with the market. So if you haven't done so already, take advantage of that and look forward to talking to you again next week.